After trading for 12 years and documenting over 3,000 trades, I discovered something fascinating. Most traders quit in year 3, right when they're about to break through. Today, I'm going to show you exactly how I survived this critical period, and by the end of this video, you'll have a complete framework to push past this breaking point. But before I reveal that, there's something crucial you need to understand about the psychology of trading. Like many of you watching, I started trading because I wanted financial freedom, right? I watched all those gurus showing off their Lamborghinis and luxurious lifestyle. Not gonna lie, it was tempting, but after blowing multiple accounts and losing a 5-figure PAMM investment, I realized something that changed everything. Comment below if this sounds familiar. You have a few winning trades, feel on top of the world, then suddenly everything falls apart. Your winning strategy stops working, your emotions started controlling your decisions, and you start doubting everything you know. This is what exactly happened in year 3 of trading. And there's a fascinating psychological reason why. But before I explain that, let me show you what really happens in a trader's journey. Trading follows a predictable patterns that nobody talks about. In year 1, you're full of excitement, right? Everything seems possible. You have some wins, maybe even a few big ones. You think you have figured it out. I remembered my first year, I turned $5,000 into $15,000 in just 2 months. I thought I was a genius. Year 2 is when reality starts hitting. Your strategies don't work as well. You started learning more, trying different approaches. This is when most traders go down the rabbit hole of technical analysis. More indicators, more complex strategies, more rules. I talk about why I stopped using trading indicators in this video here. But it's year 3 where everything changes. And here's why. By year 3, you have learned enough to be dangerous. You know the terminology, you understand the concepts, you had both the winners and losers, but something still isn't clicking. Later in this video, I'll show you exactly how to navigate the critical 3rd year. But first, you need to understand what's really happening in your trading psychology. Here's what makes year 3 so dangerous. The Dunning-Kruger effect. In simple terms, you know just enough to feel confident, but not enough to know what you don't know. I see this all the time in funded trading. Traders pass their challenge, get funded, then blow account after account. But here's what's fascinating, and I'll show you exactly how to avoid this trap in a moment. The traders who survive year 3 almost always make it long term. They become the consistent performers you see posting steady growth month after month. Let me show you the 3 critical mistakes that caused most traders to quit in year 3, and more importantly, how to overcome them. The first mistake is what I call the complexity trap. By year 3, you have studied enough to know multiple strategies, dozens of indicators, and countless trading rules. You think more knowledge equals more profit. I fell into this exact trap. Let me show you what happened in my own trading. I started with simple price action strategy. It was working well, too well actually. So what did I do? I thought, if this works, imagine how much better it would work if I added more indicators, more confirmation, more rules. A big mistake. My win rate actually dropped from 35% to 21%. But here's the interesting part, and this is crucial for what I'm going to show you later. That a 21% win rate would still be incredibly profitable. The problem wasn't the win rate, it was what happened next. The second critical mistake, the confidence crisis. When your win rate drops, something happens in your psychology. You start moving your stops. Here's what nobody tells you about trading psychology. Confidence isn't about just being right all the time. It's about being okay with being wrong. The best traders I know aren't the ones with the highest win rates. They are the ones who are completely comfortable with losing. Later in this video, I'll show you exactly how to develop this kind of confidence. But first, there's something even more important you need to understand. This is where most traders finally break. After experiencing drawdowns and losses, they enter what I call the recovery trap. They start trading to get back to break even. They even start to take bigger positions. They start forcing trades. Comment below if you ever found yourself saying, I just need one good trade to get back to break even. This mentality is exactly what keeps traders stuck in year 3. Now, here's where everything changes. After working with hundreds of traders and experiencing this myself, I've developed what I call the breakthrough framework. This is exactly how I push past year 3, and it's what I use to help other traders do the same. The first principle, simplification. But I'm not talking about just removing indicators from your charts. I'm talking about simplifying your entire approach to trading. Here's exactly how this works. You focus on one specific setup. You wait for obvious setups. But before you start going to your chart to focus on this one specific setup, you need to understand the second principle, the probability shift. This is where everything changed for me. Instead of trying to be right on every trade, I started thinking in probabilities. Here's what this looks like in practice. My trading strategy has a 21% win rate and an average winner of 3.92 R. You might think that I'm not profitable, but let that sink in. I have a high break-even rate of 34%. I can be wrong 45% of the time and still make money consistently. This completely changed how I approach trading. But here's what's crucial, and this is where most traders get it wrong. You have to truly accept these probabilities. It's not enough to know them intellectually. You have to feel them in your gut. So, how do you actually implement this? Here's the exact process I use. First, you need to identify your one setup. This is the setup that resonates with you, that you can spot easily. This should be the setup that you understand completely. For me, it was a specific price action patterns that I saw repeat over and over again. Second, you need to master your risk management. But here's what's interesting. When you're only trading one setup, your risk management becomes much simpler. You're not trying to adjust your position size for different setups. You're not trying to manage multiple strategies. Third, and this is absolutely crucial, you need to develop what I call emotional immunity. This is where most traders in year 3 fail. They can't handle the emotional swings of trading. Here's exactly how to develop emotional immunity. Start with small positions. I know this sounds basic, but here's what nobody tells you. The goal isn't to make money at first. The goal is to prove yourself that your setup works over many trades. Track your setups, but don't just track wins and losses. Track how you feel before, during, and after each trade. This is where you start seeing patterns in your emotional response. Here's something crucial that most traders completely overlook: proper data collection. But before I show you how this works, let me tell you a quick story. Last year, I was convinced my strategy wasn't working. I was ready to quit. But when I actually looked at my trading data properly, I discovered something fascinating. My strategy was working fine. I was the problem. I was over trading during certain market hours and under trading during the best times. Here's exactly how I collect and analyze my trading data, and this changed everything about how I trade. Instead of just tracking the wins and losses, I track specific variables that actually matters. What time did I enter the trade? What was my emotional state at that time? Was I following my rules exactly? These aren't just random questions. They reveal patterns you've never seen otherwise. But here's what's really interesting, and I'll show you exactly how this works in a moment. When you track the right data, you start seeing patterns that were invisible before. For example, I discovered that my win rate was nearly doubled during certain market hours. I would have never known this without proper data collection. Check out this video where I talk about proper data collection. If you need a free trading journal, check out the link in the description. This brings me to something that nobody talks about in trading: burnout. Let me be really honest here, I've burned out many times in my trading career. Each time it cost me money and confidence. Comment below if you ever felt completely exhausted by trading, staring at charts all day, unable to think clearly. I see this all the time, especially with funded traders. Here's what I do now to prevent burnout, and this has completely transformed my trading. First, I have what I call power hours. Specific times when I trade, and more importantly, specific times when I don't trade. This isn't just about work-life balance, it's about trading performance. It's also okay to take a few weeks of break for holidays, rest, or even just to feel more recharged. When you come back to the charts, you'll feel more refreshed and you can see from a newer point of view. The market will always be here. You don't have to feel guilty of not doing anything related to trading. Remember, we want trading to be a leverage for us to have freedom in time and not to be a slave to the market. Now, I trade in focused blocks. 2 hours in the evening. Until then, no charts, no trading, no market watching. I go to work, head to the gym, spend time with my family, live my life. And here's what's fascinating. My returns actually improved when I traded less. But there's something even more important than time management, the community factor. Here's something I wish someone had told me in my first year. Trading doesn't have to be a lonely journey. In fact, the most successful traders I know all have strong communities in trading. But here's the key. This is crucial. I'm not talking about chat rooms where people share signals or calls. I'm talking about real communities where traders support each other's growth. Let me share something personal. My biggest breakthrough came when I joined a serious trading community. Not for hot tips or signal, but for accountability and psychological support. When you're struggling with a trading problem, sometimes you just need someone who's been there to say, yeah, I went through that too. Here's how I handle it. This is why I always tell traders to find your tribe, but be selective. You want to be around traders who are focused on process and not just profit. Traders who understand that consistency comes from discipline, not just good entries. I'll share more about how to find the right trading community in my next video. But for now, here's what to look for. Traders who focus on risk management over profits, a culture of accountability, open discussion for struggles and failures, focus on long-term growth over quick wins. The right community can cut years off your learning curve. The wrong ones can reinforce bad habits and keep you stuck in a cycle of inconsistency. I'm currently trying to build community for like-minded traders. If you're interested, check out the link in the description. But here's what's really powerful. When you combine proper data collection, burnout prevention, and community support, something magical happens. You start seeing trading as a business, not a hobby. You start making decisions based on data, not emotion. You start treating your mental energy as your most valuable trading asset. Now, here's what ties everything together. What I call it the consistency framework. This is exactly how you push past your year 3 and become a consistently profitable trader. First, you need to accept that consistency isn't about being right all the time. It's about having an edge and executing it flawlessly. Second, you need to understand that your edge isn't in your entry. It's in your risk management and position sizing. Finally, you need to develop what I call the process focus. This means focusing entirely on executing your strategy, not on the money. So here's exactly what I want you to do starting tomorrow. Identify your one setup. Just one. The setup that you understand completely. Backtest only that setup for the next 30 days. Record all the trades in my free trading journal you have downloaded. Focus on execution, not results. Remember, the traders who made it past year 3 aren't the ones with the most knowledge. They are the ones who mastered the basics and learned to execute flawlessly. Drop a comment below with your biggest trading challenge right now. I read every single comment and use them to create content that helps you overcome these specific challenges. Trading success isn't about finding the perfect strategy. It's about mastering the fundamentals and developing the right psychology. Start your journey to consistency today. Hey, if you like this video, make sure to check out this video on why I stopped trading using indicators.